important things that's changing the world is the rising bond yields, especially 10 years and longer duration yields, 10-year and 30-year yields, which we are seeing not just in the US but also in Japan. Uh, is that a concern going forward, given that we're going to see inflation? And how do you see the Fed, reacting to this? Because you have a new Fed chair, which has also come in, who is supposed to cut rates, but the environment is, it seems, not conducive for one.
Yeah, I mean, we are definitely concerned about rising long-term bond yields, and in fact, there are some statistics that show, once your 10-year gets above 4%, your next 3 and 6 months historically, in terms of equity returns, have been negative. So yeah, we are definitely concerned about rising bond yields. Now, there's no doubt that the monetary conditions are tighter today than we thought they would be at the beginning of the year, and that's a direct result of the war and increased inflation. So we're looking for tighter monetary conditions going forward. We don't think it's a done deal yet that we will see hikes by the Fed. In fact, we're calling for no hikes this year is our current forecast. But do we think hikes are more likely now than we did at the beginning of the year? Absolutely.
And is inflation is going to be a big concern in the US?
Well, yes, I think inflation is a big concern in the U.S., and that certainly is going to, factor into the Fed's decisions. But yes, I think that inflation is a concern, and I think that the central bank will be quite strong in terms of how they deal with that. Now, the question is this inflation transitory or is it more core? And I think the jury is still out on that. We're not really sure about that yet.